the sense, Jakes, on how bad can things get from here? Do you think the worst of this global rout is over and done with? Can we now focus back on buying into the market? You've said that, yes, mid caps and small caps have come off, but there's this overarching fear of, will they fall further from here?
Of course they can fall further. I mean, there's nothing to say that things can't fall further, things can't get worse. But let's see, what are we sort of contending with here?
Yeah.
We're contending with a scenario where, for the first time, you've had global growth. You could now have a contrarian point of view that will global growth continue in this manner. You have the situation where most central banks have started pulling in, other than BOJ and ECB, which have actually continued to be accommodative. So the easy money may continue, but not as much as it used to be earlier. So those are two things that the market's already building in. Yields are moving up.
Yeah.
So in this context, where does India fit in? India actually came in uh, into a curious sort of set of circumstances where oil started moving up. Our own growth sort of got challenged because of certain things, and we were looking for corporate earnings to catch up with the rising tide. We have been underperforming. Let's put it in context. We've been underperforming global emerging markets right through this period. So as we sit and speak now, maybe early signs, but crude has come off $5. Now,
That's true.
people are comfortable in the 50 to 60 range. It had moved up into the 70s, as it were. Now it's in the mid 60s. One swallow does not a summer make, and I'm not saying that it's actually reversed, but you could have a situation where crude settles in maybe $5-7 lower. Okay. So if it settles in the $60 range, that's a big positive from a macro perspective. Second thing, if you see the MPC minutes yesterday, they talked about how towards the end of the year inflation forecast may be moderated. So from an equity market perspective, the RBI doesn't believe this is going to be a shooting inflation. Short term, yes, there's pressure on rates. I feel if we kind of navigate this over the next 3-6 months, even from the macro perspective, I'm just addressing the macro for the moment, you will have a situation where towards the end of the year, I think inflation levels may be a little lower than where they are right now. The fears that the government will borrow indiscriminately may not be there. Yes, I think GST collections will be way beyond what the government has even projected. I'm actually very bullish on the GST implementation as it's rolling out month on month. So given all that, I think for a moment that the environment for equity markets to perform is there. As an index, we may be constrained that we may have made a near-term top at 11,200 or 11,300. I'm no one to predict indices, but I think the coming off of a 7-8% on the index or 9% on the index is more than offset by a 30% correction or 25% correction in a lot of mid and small cap stocks. So being a stock picker, you want to be in a situation where fear has swamped greed in the short run. People are now scared. People have been giving all kinds of, the Cassandras out there, if not the doomsdayers, would basically say that, the top for the year is made and over. I think for a moment that we may take time to conquer this peak, over a period of time, maybe the next 3-6 months we may not conquer the peak, but I think from an index perspective, I see 9,800 to 10.2 as being a very, very solid bottom. In fact, I would go to the extent of saying in the 10.2 range. And the reason I say all this is that in the international correction, for the first time, very important to note, that the equity market correction was, in a sense, restricted to the equity markets. The yields came off a tad, nothing much. The equity markets have come off much more. The commodity markets were not affected. The dollar did not, other than finding a bottom, did not really zoom through the roof. Safe haven was not there, found in terms of gold buying. So for the first time, a correction in the US markets that set off corrections everywhere else may have been just as a result of being overbought. It's a vicious, vicious, algo-related thing. And as we know now, an inverse VIX product blew up. So for the first time, it was like the tail wagging the dog, which is that a derivative of the markets is supposed to be the VIX, but the VIX drove the markets. So I think if you were to say that a specific event in a specific market, in a sense, brought it down by 8-10%, and then now it's kind of inching back because fundamentally people feel stocks are there, are become much cheaper and therefore are buying into it. So I think this is not a contagion. This is not something that we need to certainly get alarmed about. So from that perspective, I think let maybe a few weeks pass, and I think if volatility starts inching down the way it has been over the last few days, again after having shot through the roof, we'll be back to stock picking. So, I mean, this is a long answer to a short question, but it's the best time to be stock picking.
Near long answer.